Good afternoon, everyone. It's Live Stream Tuesday. I am Paul Mampilli of ATG Digital. And before I do anything more, I should do legal disclaimers and disclosures because today's subject, there's no surprise. I'm going to talk about Bitcoin. I'm going to talk about the markets. I'm going to talk about some of the stocks that I've talked about in previous live streams. Um, and set things up for what I think is going to happen for the rest of 2024 and 2025 for various groups of our investments, because it feels like if you're in markets like we're in like this calm, and many people think, well, Paul, it's probably the calm before the storm. Yeah, maybe, but I think most people will be thinking like, well, there's some crisis coming. Generally, when we think of calm before a storm, we always think bad news. We think something terrible, but I don't think that that's what's setting up. And Yeah, there's an election obviously that's coming in. Wow, in less than 2 months. So that's obviously going to probably create some of the environment where people don't want to make commitments. So maybe that's contributing to the calm. The other thing is just that there's so much cash that's been pumped into markets by the Federal Reserve, so much cash that continues to be pumped in by the US government into the economy. Yeah, generally, you don't have like crashes when there's like too much cash. Reason why markets crash, et cetera, is because there's leverage and people don't have money, so they're forced to sell. That sets a domino effect. But I'm getting too far into things. Let me do all the usual legal disclaimer stuff, and then let's get into today's live stream. All right. First, this live stream and the content from ATG Digital is not investment or financial advice. It is presented as opinion, information, engagement, and entertainment. Next. All ATG Digital content may contain errors, oversights, and mistakes. In other words, don't assume that this is like word from God, from the Bible or something like that. These are just based on our best efforts. You should go and do your own work and research stuff, and before you make decisions, understand that investment operations have significant risks and can lead to the loss of your principal. Investment operations mean what? Well, buying or selling a stock, buying or selling crypto, engaging with a option trade. Loss of your principal, losing money. No one needs to talk about making money because, hey, that's always like fun and good. Next, the owners, employees, contractors of ATG Digital own, trade, transact, and securities are mentioned in this video and all the content from ATG Digital. We do not take money from companies or crypto promoters, sponsors to recommend their stocks or crypto tokens for better, for worse, for gain and for loss. All of the trade recommendations to the model portfolio at ATG Digital, all of my opinions, they are independent. They come from me based on the work that we do. Need to hide that quickly here. That's the free stuff that we put out, Substack, podcasts, YouTube. This is social media. Pretty active on X. I've been quiet for the last few days. Instagram, yeah. Facebook, Dean is often on Facebook, entertaining all of y'all. Okay, let's just talk about overall stock market and what is going on. I don't know if you agree, but my sense anyway is like there was like this period from October till probably a month or month and a half ago where there was a lot of excitement. AI was like this hype that was pushing a lot of stocks higher. Nvidia in particular, which was getting people excited, that pushed a lot of money particularly into the Nasdaq, and now it's kind of gone quiet, right? The stock market's gone quiet. It's kind of like up and down. It's choppy. It's up and down. It's choppy. And I think it's because there's no major like market event. Like for a long time, people were waiting for Nvidia's earnings, and then that was like anticipated with like a sense of excitement. And these kinds of things will draw money into the market, draw money, not just into the one stock, but like, into obviously the indices. And, Nvidia is such a large company. It obviously would draw, a lot of people in, but they've got nothing now. I mean, um, earnings for everybody is over. Even Apple's, like, whatever, is it iPhone 16, 17? That event is over. There's not kind of like nothing. So like the next event that everybody sort of is like probably going to bet on is the election. And that's 2 months away. So prior to that, we've got options expiration for the quarter coming on September 20th. So, there will be churn in the markets as option bets are either rolled over or the expirations come. So we've got that'll come through. And then from there, we've got what? Earnings that will start in like probably in late October, mid-October, which will go right into before elections come. And then my best bet is that, like, I mean, we'll see what will happen with earnings. I mean, I don't think there will be the same level of excitement for earnings, or whether it be NVIDIA or anybody else, because I mean, the prices of these like tech stocks are so bid up. I mean, and you could see what happened when NVIDIA released they grew by 160% and the stock went down, right? I mean, that's not unusual. If you've been in markets, you can see like, good news can be like priced way into the future, that even if you get big growth, the stock will go down. So I think we'll be in like this chop and this churn, as probably people make bets. I think people will make big bets into the election. This has become a big bettable market event. It wasn't like, in the 1990s, elections came and went, and I don't really remember the markets moving that much. I mean, it was much more financial driven. But today, I mean, politics is so big, such a big part of what we talk about. We have social media that focuses on it. So, I mean, I imagine that there's all kind of scenarios that people want to bet on. Hey, if this person gets elected, it's the end of the world. If that person gets elected, it's the end of the world. I'll just say this. I have never found it worthwhile to make my investments based on the politics. I mean, the United States has been around for a very long time. The markets have been around for a very, very long time. And you can see, I mean, on both sides. I mean, I know people who said like, well, when Trump was elected in 2016, like the world's going to end, I'm selling all my stocks. That was not such a great bet. On the other side, was that, well, when Biden was elected, though it's the end of the world, I'm selling all my stock. Yeah, not so good. Why? Because, well, I mean, look, we're all going to wake up the day after the election, and we're going to what? Go brush our teeth, go make breakfast. If you have kids, take them to school. You're going to do everything that's there. If you need another set of pants, you need a pair of shoes, you want to order the next gadget, whatever. I mean, the businesses are all going to continue. And so I would say, like, the event betting around the elections will come, it will go, though something will happen. But if your timeframes are long enough, and our timeframes are sort of like 3-5 years in that time frame, it's not going to matter. It's not going to matter. And particularly for our investments, which have been in a bear market for 3 years or so, I'd say, demand and supply for these stocks are much more critical than anything that's going to happen with the election. I mean, we have gone through a period where interest rates went from 0 to 5.3%. Devastated really the valuations and prices of pretty much growth companies, innovation companies, anything that was perceived to have some risk, or perceived to be what's called long duration, right? Long duration. What's long duration? Well, essentially, if you're making a 3, 5, 7-year bet, it's long duration. I put up this chart before, and I'm going to share it now of like what very clearly benefited from overall economic growth as a result of a lot of money being pumped into the economy by the government, a lot of money being pumped by the Federal Reserve into markets. What benefited? Well, I mean, I don't think if everyone can see this chart very well. I can never tell the scale of it. If it's good, it looks okay. I'm using an app called StreamYard. It looks okay. But you can see obviously the S&P 500, which is dominated by the big tech companies, they benefited. That's the dotted blue line. I mean, okay, this is probably too small to see, but the S&P 500 benefited. Housing, obviously, you can see housing stocks, they ramped up. People continued to buy bonds even as interest rates went up. That's unusual. That's different. But you can also see those are all shorter duration bets. All right. I mean, they benefit from overall economic activity. And what got crushed? Well, I mean, I use Cathie Wood's ARK Innovation ETF as a proxy for, so let's say, innovation and growth. It's not necessarily the best proxy, but nonetheless, I mean, ARKK has a lot of stocks that we share in common. Tesla, I mean, obviously we own Bitcoin, and then there's things like Block and others that are there. So it's a good proxy. Those are considered long duration investments. Let me just define what long duration investments is and why there is an investment logic for why this chart looks like this, because the red line is short-term interest rates. And you can see as short-term interest rates go up, which is the red line, the purple line, which is ARKK and Cathie Wood's ARK Innovation ETF, crashes along with many, not most of like the stocks that we owned. It crashes. And then the green line is the ETF that represents the 20, 30-year treasury bond. Obviously, a 20, 30-year investment is long duration. So here's the investment logic by which I believe the markets are working off, which is that a long duration investment, like say, for example, a company that is innovation based, let's say it's Tesla, right? I mean, Tesla today it's about 50% below its peak, right? A long duration investment, but the way that investors and markets look at it when using interest rates as the primary way to value an investment, they're like, well, Tesla's peak cash flows and profits are way out into the future. For assumption's sake, let's say it's all the way out and we are in 2024. Let's say Tesla's peak profits are 15 years from now in 2039, right? In 2039. So if inflation is rising and interest rates are rising, the way financial theory works is that, well, the value of those future cash flows are worth less under rising inflation, and hence the value of this company must be lower. And that is the theory, practice, basis under which you're seeing this split. You see the S&P 500 up, housing stocks up, junk bonds up, because what are the things that have been going up have? Well, they have current cash flows. What's current cash flows? Meaning that they're producing money right now for investors. I mean, if you're in the S&P 500, I mean, it's dominated by Apple, Microsoft, Amazon, Google, Nvidia, Meta. Tesla is there, but like Tesla stock, as I said, is down 50%. So it's not benefited from the last 3 years. But all of those like big companies, and there are other big companies, Berkshire Hathaway, JP Morgan, United Healthcare, all these companies, what do they have? Well, they all have current cash flows, and they are, their peak cash flows in all likelihood are happening right now. So like, this is what the market has bid up. And they're like, well, in a world of like high interest rates and locked in higher inflation, what you want is a company that is producing, cash flows and rising cash flows, or at least stable cash flows right now. And the market has bid these up to like sky high levels. I don't think that's sustainable. That's not sustainable. Certainly, you can see the red line is rolling over. That red line here is rolling over. I don't know if you can see my mouse. You see them? I don't know if you can see my mouse, but the red line is rolling over, which is telling you that weaker growth is coming, which is telling you that inflation is, I'm going to go back to 2019, but it's not setting up for another period where we have, I don't know, 6% inflation, 9% inflation, like what we saw in 2021. And under that scenario, here's what I think happens over the next 12, 18, maybe 24 months. We're not going to have a sudden cut in interest rates like we had in 2020, where interest rates were taken down from, I don't remember, during COVID, what was it, like maybe 2 or 3%, and then the Fed just cut it to zero. That was because of a crisis. We're not going to have that. Instead, what we're going to have is a little bit of a reversal of what we saw really from 2022 onward, which is that, we saw like this, like just persistent, regular lift in interest rates quarter after quarter after quarter, as the Federal Reserve essentially looked to suck in the money that they themselves had pushed into markets, and that the U.S. government had pushed into markets as a result of all these stimulus programs and everything else. Now, with inflation coming back to, it's between 2 and 3%, they, in response to either employment numbers showing up weaker, GDP showing up being slower, they have room to cut, but it's not going to be all at once. It's going to be, I'd say, 0.25% per quarter. Maybe in a quarter when it looks like maybe a recession is more likely, maybe 0.5%, but we're not going to get a big cut. We're going to get instead like small little cuts quarter after quarter over the next 12, 18, 24, maybe even 30 months. I mean, it's going to be dragged out over any number of years. And as that happens, you will see a reversal unfold of this. Why? Well, because now, using the same theory by which all innovation and growth stocks have been crushed, well, if inflation is in decline, then future cash flows are increasing in value. And now, whether it be the ARKK ETF or any of our innovation-based stocks, so it'll be Tesla, Square, any of the others that are there, the future cash flows start to become more valued. Investors flip their viewpoint on the world, and now they will start to bid these higher and higher. And then on the flip side, you're also going to see, at best, stagnation in the S&P 500 capital weighted index. I think the equal weighted index will start to outperform the cap weighted index. I don't have that chart up here, but that seems to me a pretty plausible scenario. Why? Well, because the top of the S&P 500 as it's currently constructed, and most people are invested in the cap weighted version. 35% of the S&P 500 is in like 7 stocks. 70% of the S&P 500 is essentially in the top 100 stock. This is a very top heavy index. And then the valuations reflect that. I mean, people have like really herded themselves into the most expensive high price stocks somewhere near the peak, which is very much in line with human behavior. I mean, because we are so focused on price. We hate buying at low prices because at low prices, the news is bad. I can say, the vast majority of the stocks that are in ATG Digital portfolios, other than like a handful, like Palantir is doing well. We sold Uber out of the silver tier, but for some time that was doing well, but it was just a handful of stocks. In other words, people don't want to buy stocks at low prices. What they want is high and rising prices. And so when a stock price is going up, everybody's in. And when you're in, it feels so good. And then when it starts to like hit the first decline, nobody wants to sell because you want to sell at the previous high. So the scenario I think that comes out over the next 3, 5, and even longer is that you're going to see stagnation in the big indices that everybody has piled into over these last 3 years, the S&P 500, the NASDAQ 100, because they're dominated by really very few stocks where the prices are high, the valuations are very high, but they don't have growth. They don't have growth. And into a slowing economy, into lowering interest rates, once again, we will come into the conditions that are ripe for a bull market. And that is setting up right now. I mean, that rolling over of that red line is telling you what is going to happen. Just like in late 2022, you could see the red line, which, by the way, is the 3-month US Treasury bond yield. It starts going up before the Federal Reserve starts lifting interest rates. I mean, it starts moving up at the end of 2022, and the Federal Reserve doesn't start raising interest rates until March. So by the time the Federal Reserve had raised interest rates, the 3-month T-bill yield was already like at 0.4%. So this market, the market for very short-term 3-month Treasury bills, has a very good track record of anticipating what the Federal Reserve is going to do. And being that the market is set up in this way, which is unusual, I can tell you from having been in markets for 30 years, to have this like open jaw scenario of like long duration versus short duration is very unusual. I don't think in my 30 years we've seen it, because we've never been in a scenario like where we are right now, where interest rates have gone from 0 to 5%. They're now setting up to go back to, I'd say on the low side, 3%, probably 3%. But where the markets are flush with cash, there's really not this setup where you're going to see what we experienced for the better part of 16 years, which is like every time interest rates went up, there was either an actual crisis or a fear of a crisis that made the Federal Reserve cut back to zero. Instead, people have money. People have money. They have money because the government has been spending money like crazy, which is why I have this crazy deficit. The Federal Reserve, has just plumbed the markets with extraordinary amount of money, which even after lifting interest rates to 5%, it still doesn't really fully have in control. I mean, they went from 0 to 5% in the fastest level, I think, in economic history. And, we don't have a recession. We don't have a crisis. We don't have a crash. None of that has happened. I mean, they've lifted interest rates so much. So there's the markets are juiced with money. The economy is juiced with money. We have still rising wages. We have relatively low unemployment. We have an economy that, is growing, continues to grow. So in this scenario, which again, we haven't really had, I mean, maybe in the early 1990s, we had a little bit, but I've never really seen a market set up like this where there's this clear split between short duration and long duration. And if I'm right, what you're going to see is that red line is going to trend down as 2024 continues to happen. It's clearly rolling over. That's short-term interest rates, which is predicting and telling you that the Federal Reserve is going to cut, but slowly, not all at once, slowly. It's telling you that, I'll say, this tends to be about 3 to 6 months ahead of the Fed. So they're telling you already that, by December, I'll say by between December and March of next year, interest rates will be at least 0.5% lower. That's what that red line is telling you. If this is correct, then equally these long duration investments, in other words, growth and innovation stocks, pretty much the ones that we have in ATG Digital portfolios, long-term bonds, they're all setting up to rally. The markets are not set up for that. The markets instead are continued to be set up for as if interest rates are going to stay high, inflation is going to go back to, 4 or 5%. They are not really prepped for inflation staying in some reasonable range, I'll say between 2 and 3% for a long period of time, and for interest rates to go back and settle probably in the 3% range and to stay there for some period of time. That scenario of well-behaved inflation and relatively low interest rates, 3% interest rates, yeah, that's a pretty good rate. That's a very happy rate for pretty much everybody, right? Except for many of the stocks that have been bid up because they really kind of need inflation. Inflation allows you to lift prices, which, if you're a big company and, you have some kind of like monopoly power, you can lift prices and those are free profits for you. On the flip side, in a period when there is slowing growth and where you cannot lift prices and you got to compete, yeah, this is when smaller companies can really, shine, and also where you compete for market share with another company that has a better, different, new technology, product or service. Yeah, there's going to be market share that is taken by innovation and growth companies from legacy and incumbent companies. So we're setting up for very, very good times in the rest of 2024 with volatility because we've got the events I told you about. I mean, there's the regular market events, options expiration, earnings, election. But I'll say, irrespective of what happens during the election, we are going to see a growth bull market unfold markets look forward by minimum 3 to 6 months. So that's always been true. I've never known that. There's moments of panic, etc., but still looking out 3 to 6 months, the interest rate call is the biggest thing that is most important for our investments. And you can even see that green line starting to respond, which is the 20-year bond. In other words, investors who are seeing the same thing are like, yeah, interest rates are heading down. Yeah, short duration investments, which is, because of the concentration of stocks in the S&P 500 and people's hyper focused on high priced, highly valued stocks with, either they have a lot of cash and they have a lot of current cash flows. Yeah, those are not the things to be in if you want performance coming into the future, and they are starting to accumulate, the safest one, which is the 30-year bond. That's that green line starting to break out. So in my opinion, in my judgment, good times are coming. It's been a very long, brutal 3 years because prices peaked in February, March of 2021 using the ARK Innovation ETF. But equally, I can say, our stocks are very young. The biggest companies in the United States, we've got like $7 trillion companies, trillion-dollar companies. Tesla, which is the largest stock that we own, is, I think, like a little under $500 billion, right? So Tesla, in my judgment, there's no question about it. This is going to become like a $10 trillion company and eventually a $100 trillion company. Why? Because, they are still growing. They are still growing, unlike Apple, unlike Amazon. Apple came IPO in 1983. 1983. This is a 40-plus-year-old company. If you go and look at Apple's finances, they're not growing. Their stock price has been driven by stock buybacks. Tesla, on the other hand, is growing. You can say they haven't grown this year. Sure. The car business is cyclical, right? But they're growing in the sense that, they have new products. Contrast Apple's presentation yesterday and then contrast, it to what Tesla is going to announce, I believe, on 10/10, which is October 10th. They're going to reveal their robotaxi, right? What did you see from Apple, which is essentially you got, I think, like a slightly different size, a slightly better chip, maybe slightly different colors, and then you have like a revolutionary technology in robotaxis that is going to change human life, right? Which is autonomous transportation. In other words, in the next 3 to 5 years, we will have cars running around with no humans in it, and where they're being driven. And that seemed far-fetched 2, 3 years ago. But we now, if you go to San Francisco, and many people have already experienced this, you can actually experience a robotaxi. It's not a Tesla robotaxi. It's run by Waymo, but there are cars that where there is no human driver and it drives you from point to point. So we know that this is possible. It's also there in China and some other countries, but this is going to happen. And there is no other company that is set up to take advantage of this technology, this development other than Tesla. So they're going to reveal their robotaxi on 10/10. And once they reveal it, I mean, Elon and Tesla, I mean, there's not a product that they announced that they haven't taken out. Like, I mean, everyone told me when I booked my Cybertruck that it would never, ever go into production. Well, I drive my Cybertruck every day, and it's amazing. It's incredible. And it's got ridiculous technology inside it. People focus on the shape, but inside it is steer-by-wire, which is the same way that planes have flown. Inside it is uni-construction. In other words, the center of it is all one big piece, which makes for very smooth handling. When you move and you drive the Cybertruck, everything moves in one piece versus a back end and a front end. And then there is the electrical architecture, which is 48 volt. Why am I getting all this geeky stuff? Because to show you, well, that's innovation. And the benefits of all of that are eventually going to be put into every Model 3, every Model S, every Model X, definitely going to go into the robotaxi. We'll go into the $25,000 car. We'll go into the semi. We'll go into every single thing. So the benefits of that innovation is going to happen not just in 2024, but it's going to happen for every year for the foreseeable future, which is why I was like, okay, assume that their peak cash flows are in 2039. Yeah, I mean, Tesla's peak cash flows are multiples and multiples of where it is today. Where's Apple relative to that? So this is the contrast between a short duration and a long duration, like sort of like investment or bet. Apple's peak cash flows, in all likelihood, are coming in the next, I don't know, maybe it's here, maybe it's next year, maybe it's in a couple of years, but it's certainly not in 2039 unless they've got some rabbit they can pull out of their hat. I mean, remember, they were going to, build an EV, or they were going to, I mean, their VR thing was going to be, the big thing. But true innovation has a certain feel, has a certain shape, which is that it changes human life, right? It is something that you do every day. It's something that you want to do every day. And yeah, I mean, the best example of this is when Apple introduced the iPhone. It changed the way that, we live. Robotaxis will definitely change human life. I can tell you that. I mean, it will not be the same. It won't just be restricted to the car market. It'd be everything. I mean, if you can just call a car and go everywhere, the amount of time we spend in a car, if we don't have to drive it, the distances we'd be willing to travel, what we can do inside it. I mean, it's good. We can't really right now imagine the change because we've never had it. Just like who can imagine how many things we now do through this piece of glass with a computer inside? Yeah, nobody in 2006, when Apple introduced a smartphone, could ever imagine, I mean, that we would do our banking, we would do, I mean, content creation, that we'd watch movies. I mean, hundreds of things that we do. Well, that's coming, with the robo-taxis where, yeah, transportation is a big part of human life and it's about to be revolutionized. And there are really only 2 or 3 companies that benefit from that. Okay, that's a long explanation into everything, which comes down to it, which is that we're about to flip. You see this jaw that's open where one set of companies and one set of investments have benefited. They're generally what's called short duration. In other words, companies that either produce a lot of cash currently, pay dividends, have accumulated a lot of cash. That's what the market has bid up. And if my experience is right, at peaks, people are usually in the exact wrong things. Why? Because at peaks, all the news is good in the things that are been bid up high. But of course, the way you make money in markets is you got to buy something that's low, that's going to be bid up. And at low prices, you have, it always feels like terrible. Like, oh, Paul, I've been in this thing for 3 years. I'm so tired. I'm down 40%. I'm down 60%. I don't want this. But I mean, hey, low prices and bad news and bad feelings go together. And then as prices get bid up, of course, our viewpoint on the world changes. And I believe, based on tracking markets for 30 years, that red line has been a great indicator, has always been a great indicator of when growth stocks are setting up to take off. So 2024, 2025, and I think like for, I'll say 5-7 years, at least one cycle, we're going to see like our stocks boom higher. And it's going to catch everyone, of course, off guard, because people are expecting the current leaders to be the future leaders. And I'm telling you, from 30 plus years experience, that's not going to happen. The future leaders are going to be different than what they are today. And we own many, many of them. Tesla will be one of them for sure. Many others that are in our silver tier and other portfolios are in there. Okay. Next thing I want to cover is Bitcoin, because I talk a lot about Bitcoin, and I saw something that I wish I had known earlier. Because remember, Bitcoin is still fairly new as an investment. It comes to life in 2009, sort of like in the immediate aftermath of the 2008 crash and global financial crisis. And so it's been around for 15 years. It's really not a very long time. And Bitcoin is so unusual, right? I mean, I truthfully, when Bitcoin first came about, I was like, this is a classic bubble. This is like this pretend made up coin that is like, that people are focusing on. I'm on record on YouTube. It's still there. I was comparing it to the .com bubble. And then in 2017, it went to nearly $20,000. And I thought, that's insane. That's ridiculous. In other words, I had all the traditional like arguments as to why you wouldn't want to own Bitcoin. And then as Bitcoin crashed from 20,000 all the way down to 3,500, that time period from 2017 to 2018, I spent a lot of time researching, studying currencies, money through time. I'm trying to say, I should have gotten the books out, but I bought a whole bunch of books. Let me see. Where can I find it? A whole bunch of books about the origins of money. I can't find it. I'll dig it out for next time. But the origins of money just made me realize, like, well, money has never stayed constant. We think, of course, of paper money, or now digitized paper money. Like, I mean, I don't really use cash anymore. I either use my phone or use my cards, but it's just a digitized form of fiat or paper money. It's never been the same. I mean, you go through time. We've used shells. We've used beads. We've used giant rocks as money. And the one consistent thing in all of my research and study is that money eventually is represented by the kind of like the technology of its time. Like the printing press is an industrial technology. And so it makes perfect sense that, we go from like a metallic based currency system that was there prior to the Industrial Revolution to something that uses, of course, machinery, right? I mean, in other words, we can just print paper very, very quickly. I mean, printing paper prior to an industrial press was quite difficult. So money moved with technology. And then it just clicked with me. It's like, oh, of course, like what is the technology of our time? Well, it's computers. And while we're using computers to move money, the money itself, the character of it hasn't changed. And Bitcoin was the first true digital money. Like its basis is digital. Its basis is not like based on on something in the past. It's completely new. And I was like, oh, I see. I get it. And so I, at like somewhere near the bottom, pure luck, I don't really think it was skill, because I realized how much I didn't know at the time. I mean, like today I've studied Bitcoin very, very extensively for long periods of time and continue to work at it, and understand more and more things. I mean, I was like, hey, this is a bottom, and I think you should buy it. But even then, I thought of it as a speculation. But today, I think of it as like a global reserve currency that, I mean, whatever Bitcoin I own, I think I only sell like tiny, tiny amounts of it. But I've also studied the movements of Bitcoin. And because of how unusual it is relative to anything we've had in human history, it's got like a very particular pattern. Like we have never had a currency in human history with a absolute finite, mathematically finite limit. Like Bitcoin has 21 million Bitcoin. We've never had that. Like gold is scarce, but it's not finite. The supply of gold rises by 2 to 3% pretty much every year. So it's scarce, but not, we never had something finite that human beings have valued like in this way. And then we've never had any currency where two new innovations that Bitcoin has brought. One is that the supply of it is controlled on a set basis, 210,000 blocks. Again, it's mathematical and not driven by a human person deciding, oh, I need more money because whatever, the economy is down, there's a famine, there's a depression. No, it's every 210,000 blocks, which approximates to about 4 years. But it's the 210,000 blocks that matters. So that's that periodicity. That's an innovation. Second, we've never had a currency where its new supply only goes down. Right? I mean, every 210,000 blocks, the new supply gets cut. Not all supply, the new supply gets cut by half, right? By half. We've never had that. All human currencies, the US dollar, the Japanese yen, the euro, metallic currencies, I mean, there was always a way to sort of like finagle the supply, or, depending on, the price. So the very natural thing in markets is that when prices go higher, whoever makes whatever it is, whether it be a stock, whether it be a metal, whether it be kind of money, find a way to sell more of it. But there is no real way to do that with Bitcoin, right? It's an algorithm. It's mathematical. There is no manager of Bitcoin. There is no person in charge. The Bitcoin are mined, like in this like completely distributed fashion. There's no one, like for a little while, I used to have a few miners. I mean, they were through a different company. I didn't have them at home. I used a company that was there, but I owned a couple of miners. There's people that you can run a miner, you can run a little mining rig from your house if you want to. There's no way really to control it in any way, shape, or form. I mean, people say, what about if electricity were to go down? Well, you could run it off solar power. It's sort of like, almost every situation has been thought about, but it's does not respond to the supply of it does not respond to any human need, right? I mean, the dollar, as we know, like, oh, we go through the great financial crisis in 2008. The bankers take, all the money and blow it, trillions of dollars worth, and of course we have to pay for it over time by, issuance of dollars, which reduces its value over time. Yeah, I mean, not, there's no bailouts in Bitcoin. There's no additional supply that can be pumped because, I mean, somebody made a big bet. Like, I mean, for example, in 2022, as all that mess was going on with FTX and Terra, I mean, those were all crypto crises where, yeah, it would have been nice to just distribute more Bitcoin and bail out all those folks. Yeah, you can't do it. You can't do it. Instead, there's pain for anybody that's in crypto. So, bottom line, there is a very particular character pattern to Bitcoin, and this is kind of like what it looks like. Now we're in the let's see, we went through the 2012, 2016, 2020. We're in the fourth epoch, if you will, of Bitcoin. We have gone through 4 halvings. So that is the supply being cut by half every 210,000 blocks. And I saw this on X, and I was like, this has pretty much been the case. It's not perfect, it's not precise, it's not exact, but this is pretty much what has happened in every halving cycle. So the halving cycle, the first halving cycle was 2012 to 2016. The second one was from 2016 to 2020. The next one was from 2020 to 2024. And now we're in the next one, which is between 2024 and 2028. So where are we in this? Where are we in this? Well, we are, at least based on my understanding, we are in like the last quadrant of the recovery stage. In other words, we're in that last sort of like triangle, the last pizza slice before we go into the parabolic move stage. That's where we are. And one of the repetitive patterns of Bitcoin that becomes very clear, if you look at it, is that every 6 to 8 years, Bitcoin jumps an exponent. What's that? What does that mean? It means it adds another 0. So in terms of like the peak relative to the US dollar, depending on each currency, it would be different. But we are dollar investors, and dollar is pretty much the global currency by which most people measure things. So, for example, in the 2012 to 2016 era, the 2 exponents in play were 10 and 100. In the cycle after that, it was 100 and 1,000. The cycle after that was 1,000 and 10,000. Right now, we are in the cycle of between being 10,000 and 100,000. And then somewhere in the parabolic move, which is this one in blue, we're going to jump an exponent again. That's my belief. It's not happened yet. And it seems so crazy that truthfully, the first time I studied it, it didn't seem believable, which is that we're about to jump an exponent where we travel from the 10,000, 100,000 epoch to the 100,000 to 1 million epoch in terms of US dollars. It doesn't mean that it's guaranteed to go to 1 million. It just means that in the next epoch, if you will, which is my terminology, Bitcoin will travel between 100,000 and 1 million. And that time, that's going to last the next like 6 years. And yeah, as crazy as it sounds, we'll go through another cycle, and then into the next cycle, we will jump another epoch where Bitcoin will travel between 1 million and 10 million. Now, you can see why this presents a lot of problems, because the sort of like the mathematical nature of Bitcoin sort of like lends itself to a certain kind of modeling in terms of demand and supply. But of course, the prices relative, are relative to something that is much more human. Like US dollars are controlled by the Federal Reserve. The Federal Reserve is captive to what the US government wants them to do. It's captive to what the bankers want them to do. It's captive to what we want them to do. So the prices, of course, are relative to that. And it's a pretty wide range. I mean, I was explaining this to a friend, which is that if we compare the current cycle, right, which we are now in, right, to 2016, because 2016, the 2016 halving, which was like the first time Bitcoin really got everyone's attention. really, like, that should have like really been capped at around 10,000. Instead it went to almost 20,000. So in the way that the mathematical modeling of Bitcoin be, it was sort of like almost 100% overvalued. If that happened in this cycle, at least based on my understanding, Bitcoin would get to 2 million, because 10,000 was the sort of like the modeled peak based on like on the mathematics of Bitcoin, but it almost got to 20,000. If that happened again, Bitcoin goes to 2 million in this next cycle. In other words, somewhere between here and 2025. Like I've told you, sounds crazy, but that's what, past modeling suggests. What can contribute to that? Well, obviously the amount of dollars in the system would matter. We know that the Federal Reserve has created a crazy number of dollars. They've struggled to pull it back in even after lifting rates to 5%. So the financial systems of the world are sloshing with cash. Sloshing. I mean, if you can raise interest rates by 5%, which is a big move from zero, and still not have control of the money system, yeah, you put too much money into the system. You put way too much. So certainly, the capacity is there for this to happen. But there's also, you have to understand, there's also like, the downside is here, which is that on the low side, like, I mean, the model low is like 100. It doesn't mean it has to stop at 100. It just means that, like, that's where the model says that this should trade for between 100,000 and 1 million for the next like 4 to 6, maybe 7 years, as until we arrive at the next peak, right? That's like almost 7 years out, right? Imagine what a crazy price swing, right? Imagine like I'm right and we get to 2 million. And then equally, it gets overwhelmed by incredible selling, whatever, and it comes back down to, 20% of the high, right? 20% of 2 million would make it what? Like 400,000. But like, let's say 2 million is too high. Let's say it goes to 1 million, like the modeled high. 20% is still 200,000. In other words, we've seen in every cycle like a drop from the peak of 80, 75. The last one was 77%. And unfortunately, because of our price focus as humans, when do we tend to buy? Well, I can tell you, like while at ATG Digital and those folks who came over with me from Banyan, we're in at 10,000, and we've continued to keep our Bitcoin exposure. Yeah, I mean, it's going to be difficult to lose for having bought 10,000. It's very unlikely that, Bitcoin goes back there. But when's the next big wave of buyers going to come? I can tell you, they're going to come near the top. How do you know that? Well, I mean, the top is made by an extraordinary number of people all looking to buy all at the same time. That's what defines a top, right? And so Bitcoin might be the most simple in many ways to sort of like think about, but it is going to be one of the most complex assets to own because the price swings are going to be huge. I think many people are going to think they're extraordinarily rich, pile in, lever up, and get destroyed at the peak. I think the way to do this is to sort of like understand like Bitcoin works within a certain mathematical function. And I'll say for the current epoch, at least if I'm right, purchases until, say, let's say about like 100,000 are quote unquote, again, my opinion, kind of safe, undervalued, if you will. And once it makes its peak, sort of like as I put it to the team, the highest low can be $1 million. In other words, maybe we don't go through a 90% sell-off in after like a big pump. Maybe it just like, sits. Mathematically, that's possible. That's possible. But the lowest model low could go as low as 100. It could dip a little bit below that, but if it dipped below that, you'd be a buyer, not a seller. So pretty wild swings, but you know that over time, the average is going to come back to something in the middle, just like if you look between 2020 and 2024, the average price of Bitcoin has been about $50,000. That's been the average price. And so an average price for the next cycle is going to be somewhere in the range of course, like between, you take a million, you take 100,000, you divide it by two, 500,000 to 550. That's going to be the average price. But within that average price, you're going to have extraordinary swings. And so, I mean, given that we are creatures of our emotion, this is going to make fortunes and lose fortunes in pretty rapid time, no different than it has pretty much through every cycle. There were obviously fortunes made in the 2017 move as Bitcoin hit that parabolic run to 20,000. Fortunes made, obviously, on the parabolic run to 69,000. And let's see. I mean, but 2025 is that number one quadrant. That's where we're setting up for. And at least all the model that I'm saying says a million. Yeah, we jump an exponent. But if you get hung up, it's like, oh, it's a million, it's going to 10, which truthfully, I have been in there because Bitcoin's such a new asset. It's simple in its construction, but yeah, I've never seen anything like it, and I don't know if we'll ever have anything like it. But I think the next run is going to blow people's minds, no different than in 2016. And then it's going to also do what it did in 2016 and in 2021, and it's going to, destroy a bunch of wealth as well. All right. That's really what I have to present. I was going to talk about maybe a little bit about some of the other stocks that I presented, but there hasn't been a lot of movement. There hasn't been a lot of news on Mankind or Stereotaxis or Teladoc. All of these are stocks that, in my opinion, my judgment, will benefit from the transition that we're going to see as people go from short duration to long duration investments. I'll end it here. I see about 11 comments, etc. here. And let's start with some of the comments. Liz, who is a very regular live stream investor. Thank you, Liz, for attending. Doge chasing avocado. Yeah, well, I mean, imagine Bitcoin at 1 million. Where will Doge be? 3? I don't know. 4? I mean, for sure. I mean, there's no way that Bitcoin goes to, I mean, let's say I'm completely wrong. Let's say it goes to 150,000, 120,000. Still, it'll carry pretty much all crypto with it. I mean, and things like Doge, etc., will definitely run. It will also, drive money into the crypto economy. Why? Well, because, I mean, even at 100,000, even at whatever, even at 80 or 90,000, folks who have Bitcoin will start to push more money into all of these protocols where you can create more money. I mean, I'm sure you've seen videos on YouTube of how you can, pledge Bitcoin, turn it into money, which then just can go through this endless repetition where you can make more money, on Ethereum protocols. So we're definitely going to see some explosion of that happen in 2025. Obviously today, no one is thinking this, but I think it's pretty much almost certain, in my opinion. Yeah. All right, let's go to this one from David. David, who is a regular, is not attending because he's got yard work. Well, David, I appreciate the sentiment. Hope to see you again soon. Kevin says, thanks for your calm and experienced perspective. Looking forward to finally enjoying the rally for these innovation stocks as the technology transition speeds up. Yeah, me too. I mean, all of my money for many, many years, truthfully, has been in these stocks. Have I ever owned an oil stock? Yeah, I may have owned an oil stock or two in 2002 and something like that. But pretty much once, it became clear that the world is moving, at least to me. I mean, many people think I'm delusional and I'm crazy, but that's okay. I've been all in because to make big money, you have to be willing to be wrong. You have to be willing to be early, and you have to be willing to be doing something different. All right. Kevin, I'm looking forward to this myself. Paul, people tell people to smash the like button. Hey, folks, if you are enjoying this live stream, smash the like button, please. Thank you. Thank you. Kyle Sir says robo taxi. I'm not sure what the question is, but yeah, there are robo taxis driving around San Francisco at this very moment. I have actually thought to head out to San Francisco just to go and video this, since many people don't know this. But yeah, I mean, and they've been around for several years, by the way. I mean, they were pretty small scale, but I think that I saw a stat saying that Waymo, which is a Google-owned company, has something like 70,000 robo taxis operating between in San Francisco, and I think they also operate in Phoenix. So Tesla will just hyperscale this. I mean, they'll probably take it to every city that is willing to take them. And the cost of transportation, remember, is a huge burden. To buy a car today, what the average price of a car is like $30,000-$40,000. Insurance rates are skyrocketing. So to lower the cost of transportation, yeah, I mean, that's a big deal, and that's going to matter. That's going to matter. Don says 10 out of 10 for Tesla. Yep. Tesla is, the stock is what, 50% below its peak. I've been talking about its catalyst for the better part of 2 years, but we're in a bear market. Nobody cares, right? I mean, even though it's Tesla, I mean, look at any other stock compared to Tesla. I mean, all the big stocks, I mean, they've all just rocketed higher, but who's got more going on than Tesla? I mean, the Cybertruck, when then I told you all the technologies that are there that they can put into all of their cars, that's not priced in. Then there's, robo taxis and full self-driving. Which is oncoming, and then there's still the base opportunity, which is the conversion from fossil fuels to EVs. I mean, this is all there and not priced in. Tesla, as I like to tell folks, if I had no choice but to own like two things, that's all I could do. I would do Tesla and Bitcoin. Tesla and Bitcoin. Rashad, who's also a regular live stream attendee, says, good to hear your opinion. Have you seen a market doing such an election years in your experience? Should I abandon ship? Yeah, I mean, go look at, any abandoned ship moment and think, was that the right thing? Like, I mean, I remember, I was managing a very large hedge fund, $5 billion plus in 2008. I remember a story where we were meeting as a colleague of mine and I, and we were meeting with these Dutch investors, tall 6-foot dude. Now, my colleague, he was tall, but kind of thin. And me, I mean, I'm 5'6", 5'7". And, of course, our hedge fund had gotten like crushed completely. And they were so angry at us. And like, he raised a fist at my colleague. And I told him, you sit down. And like, look at today, abandoned ship in 2008. I mean, for what? What are you going to abandon ship for? I mean, what are you going to buy? You're going to stash cash? The Federal Reserve is only going to print more of that. Nobody's going to get rich by stashing cash. I mean, all the wealth that's been created in the last, 10 years, 20 years, 30 years, 50 years has been by owning assets. So you can either give in to your emotions and go in and out and see how much progress you're making, or else you can be like, hey, own a portfolio. Not everything is going to work out. There's going to be downtimes. There's going to be up times. But over time, every portfolio sorts itself out to its winners. And the better companies over time start to dominate. You leave those in. They keep compounding. They keep compounding. I mean, that's effectively what the S&P 500 is, right? They have 500 companies, and what? The biggest companies eventually dominate. You can do that yourself with much smaller companies, and that's what we're attempting to do with ATG Digital. So have I been through such an election in your experience? Look, folks, I can tell you, every election people say, this is the most important election on earth. The world will end if it doesn't go this way or that way. I've heard that for like pretty much my entire career. The country goes on. the markets go on. I believe in the United States. I believe in capitalism. I believe in markets. And I believe in the long run, this country, its people have generally done the right thing. And I'm certain that that will be true in the future. Adamantly disagree. If we would have sold after Biden won, would not be down 70%. Look, everyone can have their viewpoint on the world. The most important things for investments are these three things, not necessarily in this order: interest rates, which are like gravity to the financial markets; future cash flows, if it's a company; and then demand and supply. These are the three most important things. Presidents, as in, people can be insulted, you can be offended, they come and go. But in the end, the United States, capitalism, markets, opportunity, our spirit of being America, of being Americans, that's what rules. So I will never get that down about the US. I will never get that down about capitalism, irrespective of whoever gets elected. We have elected all kinds of people over time. Still, I believe in the long-term direction of this country. And Rashad says, Tesla has 20% of sales in China. With their economy crashing, do you think the stock will tank? Yeah, I mean, if you have a bearish view on everything, will be a reason to sell. I mean, generally what I find is this, which is that my best bet is that on every stock that you're up on, you look for good news, and every stock that you're down on or it's not rising, you look for bad news. So this is our psychology at work rather than analysis. In other words, or if we have a viewpoint that the world is going to be terrible, we seek out bad news. I mean, Tesla's sales in China actually have been ripping higher. So irrespective of whatever their economy is doing, people there are rapidly transitioning over from gasoline-based cars to EVs, and Tesla's sales in China are doing great. Let's see. PLTR inclusion S&P 500. Yeah, that's true, but I want to warn folks that that's essentially a short-term pump, right? I mean, you can go look at any price chart that's based on a pump, it reverses. So this news is incorporated into prices to think that, it's now in the S&P 500, it's going to get bid up. My general experience is that does not happen. So it's great, but really, it's a long term. The benefits of being the S&P 500 is that as money comes in regularly, now the stock gets bought, so it can sustain a certain valuation level. There's, the management has to work less hard, if you will, to go and talk about these things to analysts, etc. They can, they don't have to do all that. But in the short term, that pump that you're seeing today, or whatever, that's not real. I mean, that's like sort of like very short term. Just want to warn people. What is my opinion on Energy X and Liquid Piston? These, just from the title, sound like very speculative companies. I'll do a quick check and see if they even have. Let me go to here and see Energy X. Let me see Energy X. It doesn't even come up for me to look at a chart. Let's see. I'll try it on here. Okay, let's give this a go. Yeah, it doesn't come up on Y charts either. So I don't know about either one of these companies. I can't tell. I've not heard of them, so I have to look this up. But they sound like very speculative companies just off the bat. But it doesn't show up on either one of the things that will allow me to at least be like, okay, like where do they trade? Like, I mean, you can tell a lot by a company by where it trades. If it trades on the Vancouver Stock Exchange, for example, or the Canadian exchanges, pretty speculative. If it's a very young company and if it doesn't have pretty well-established VCs in it, probably pretty speculative, and probably something that's like, subject to what I'll call very lower quality stocks. And, in other words, you're depending on a pump, which means, the management is probably like selling into a pump. It's something to be wary about, but I have no information on these things, so I cannot present an opinion. Anthony says, like button smash, appreciate it, everyone. This is my mom, also a regular live stream viewer. Thanks, Mom. Happy to have you. Philosophic precepts. I think you asked me this last time at Cassava, and I looked at it last week. Still fairly early stage companies. There's an entire structure by which biotechs are get bid up and down. And Cassava is a clinical stage biotech. They still don't have a drug that is approved by the FDA. So people are essentially event betting on clinical trials, then event betting on FDA approval. I think we're going to have like a biotech bull market, which I think is actually unfolding already. We've added a lot of biotech to ATG Digital in this year. And in that period, as people bet on these things, you can have big swings. We don't own it. And I don't think, given what, we're focusing on, that we're likely to own it. I can't say I like it or dislike it. It could be one of these stocks just gets bid up in the general, biotech bull market. So I can't say, we'd never own it. But at this point in time, I prefer to own companies that really have an approved drug, that are going through that, where you can be like, okay, here are next year's revenues, which look pretty realizable. The multiples are very low as the price to sales, and that's a higher confidence trade. Cassava could do very well for all I know. STEM, this is the new energy sector has been brutal. I mean, we had a company go bankrupt in SunPower, so that was brutal. But that's happened. What's what happens at bottoms? I mean, bottoms are not filled with people making a ton of money. It's a true bottom. You'll have companies go bankrupt, stocks crashed, news is bad, but you have low prices. So STEM has, been crushed and destroyed. But going back to what I said, still a young company, prices are low. They have an actual technology that is, I think, worth something, which is coordinating, using algorithms, artificial intelligence, distributed energy resources, which is, what we are transitioning to. So things look bad right now, but we still own it in the silver tier, and we're going to continue to keep owning it. Nova is another new energy stock. We put that in maybe late last year, maybe early this year. We're down 40% one point, and now we're up. And that tells me that, we're setting up for a new energy bull market. I mean, we're bottoming out. The bankruptcies are happening. I own a private company where the majority owner is trying to lowball us and take us out. So I know that the bottom's happening here. So we'll continue to own new energy stocks. Jeff says, great info, Paul. Thanks for sharing insights. What is my thought on BITX? Remember, the 2X leverage ETFs, any leverage ETFs gives you daily performance, right? So you don't get the benefit of the compounding, because all they're doing is really just capitalizing that daily 2X performance. So on the way up, it's great. The moment the momentum fades, and whatever they're using, whether it be futures, options, leverage in some way, you'll start to see that, you'll start to lose more and more, and you don't ever quite get 2X as a long term. And obviously during periods when Bitcoin crashes, like we had, last week, crashed to 49,000, then swing back up, you're going to go through sometimes greater than whatever the volatility is in Bitcoin, because the option premium, if they're using options, collapses, and now you have to decide oh, I'm going to stay, maybe I'm going to re-up. So we use we do options trades using leverage ETFs in the platinum tier at ATG Digital. these you can use in the same way. These would be trades. I would not hold it long term because on the way up at some point in time, the option premiums can't expand any further, and you kind of get less bang for your buck than 2 times leverage. And then you have usually a pretty decent expense ratio, which is also eating at you. So for long-term investments, no. If you are comfortable and are a trader and you know what you're doing and you know the risks, it can be a reasonable thing in a bull market. Jeff says, loves cassava, love tweet outs. Yeah, I mean, again, like I said, these are event-based investments, and you have to constantly be aware of the position of the stock relative to whatever the expectations are. Like, I mean, I've been in biotechnology and investments for 20 plus years. Very hard to trade because, when everyone's optimistic, well, the prices are high. You can even get good news and get no reaction. And God forbid you get bad news, because that's a negative 60 or 70% like that. You can make crazy money in biotech, but you can also lose it quickly. Well, I don't think I need to present this dude. I think people who don't want to attend, they don't need to attend. But that's the questions we have for today. I want to thank you all for attending this live stream. Quick plug for subscriptions at atgdigital.media, $9.99 per month. That's the silver tier, and it goes up from there. So check us out. Thank you all for attending. It's Paul saying bye.